Carnival Corp, CCL, will benefit from growing popularity in cruises as well as an expected rise in profits. As a result, CCL stock could rise over 24% from here. Carnival stock has started to move up from its trough price of $15.53 on March 7. However, this is after having dropped precipitously from $26.17 on September 28 to $19.59 as of March 30. It represents a decline of 25.1% over the past 6 months. But now the stock is on the move up. Where things stand at Carnival Corp. Based on Carnival's March 22 update on its earnings for its fiscal Q1 ending February 28, as well as its refreshed 2022 outlook, investors have reason to be very hopeful for the future. For example, Carnival says that 75% of its cruise capacity is now in use. More importantly, it expects the full capacity to be running by the summer when it makes most of its cash flow. Moreover, Carnival now says that its monthly adjusted EBITDA, earnings before interest, taxes, depreciation, and amortization, will turn positive at the beginning of its summer season. EBITDA is a form of cash flow measurement that does not include certain non-cash charges normally in the income statement. It allows management to see how well they can afford their debt payments. In that regard, Carnival now says that it has plenty of liquidity, over $7.2 billion in the bank. Moreover, it said that its revenue measured on a per cruise day basis was actually higher than in 2019. That is a significant achievement since 2019 was the last year before COVID restrictions hit the company so hard. As it stands, analysts now expect for the year ending November 30, 2022, Carnival will produce $14.2 billion in revenue. That is over 2.5 times the $5.595 billion in sales the company made in 2020. But it will still be below the $20.8 billion in revenue Carnival made in 2019. Nevertheless, CCL stock now has a market capitalization of $23.0 billion as of March 30. This means it's trading for 1.62 times forward sales. That can be seen by dividing $23.0 billion by analysts' $14.2 billion sales forecast for 2022. This is not a very expensive multiple and indicates CCL stock could be undervalued. Valuing CCL stock. For example, Morningstar reports that Carnival stock has traded with a price to sales, P/S, multiple ranging from 1.29x to 2.72x over the past 5 years. The average multiple during that period was 1.95x, or roughly 2 times sales. That implies CCL stock is too cheap compared to its own valuation history. For example, based on this assessment, the stock could rise 23.5% from 1.62 times sales to 2 times. For example, if we multiply Carnival's forecast sales of $14.2 billion for this year by 2 times, we get a target market value of $28.4 billion. This represents a 23.5% gain over its $23 billion market capitalization today. That puts its value at $24.19 per share. Unfortunately, so far analysts are still predicting net income losses for the company for 2022. As a result, we can't use a price-to-earnings P/E approach to valuing CCL stock. However, it is possible Carnival could be getting close to becoming free cash flow positive by the end of the year. For example, recently Barron's wrote that one of Carnival's competitors, Norwegian Cruise Line Holdings, NCLH, is forecast to become profitable in the second half of 2022. What to do with CCL stock? Analysts tend to agree with my assessment here. For example, TipRank's survey of 8 Wall Street analysts reports on the stock in the last 3 months has an average price target of $21.88. That represents an upside of 11.6% for the CCL stock from today's price. Given that the company now says that it can achieve positive adjusted EBITDA starting with the beginning of the summer cruise season, there is good reason to rely on our 24% higher price target of $24.19 per share.